can do it. We can do it, do it. What's up, sons? Welcome to yet another talking head video. And you better buckle up, buttercups, because the crypto winter is here and FUD is flying everywhere. Bears are out to play, and we are seeing predictions of up to a 50% drop in the price of Bitcoin. Let's get into it right after a word from today's sponsor. Today's sponsor is myself. To support the channel, click the join button below the video and you will get access to our privately hosted Rocket Chat. Selecting the $1.99 option will get you access, and after that you need to head over to the membership tab, scroll down, and expand out your membership perks. Find the section for connecting on social media, and in that section there will be a secret registration URL to join Rocket Chat, where you can sign up to enjoy talking with other cryptocurrency enthusiasts and miners without spammers, scammers, or bots. Welcome back. So this is coming from the Daily Hodl. It says one metric indicates Bitcoin could crash by over 50% as macro environment worsens, says CryptoQuant CEO. The CEO of the leading on-chain analytics firm, CryptoQuant, says one metric is flashing a massive red flag for Bitcoin bulls. He did tell his 292,000 Twitter followers that historical data shows Bitcoin could plummet all the way to $14,000. Now, as you guys know, I typically am a little bit more of a basic when it comes to predicting this type of thing, and I'm around the previous all-time high number, which would be 21,000. However, there are a ton of changing factors, and I am no trade analyst. Like, that's not what we do on this channel. We will report on it so you guys are aware, but it is not my strong suit, and I would never take any financial advice from myself, so I recommend that you don't either. That being said, let's see why. So he says, quote, "So here's some hopium for bears. If Bitcoin crashes so hard due to the macro crisis and all Bitcoiner institutions go underwater, it could go $14,000 based on historical maximum drawdown. At the time of writing, Bitcoin is down 3.58% and priced at $29,240 US. A move to the analyst's bearish price target suggests a 52% downside risk for Bitcoin. According to the quant analyst, the most recent Bitcoin investors will likely be deep underwater should market prices fall into his worst case scenario. Quote, Bitcoin maximum drawdown in worst case scenario, newbies are down 67%, experienced one bear cycle down 39%, experienced two bear cycles, profit guaranteed, and experienced three bear cycles, profit guaranteed. Today's newbies who joined last year are in for a 34% loss. What's the point of this? Why would we be interested in it based on the amount of bear cycles that people have gone through? Well, it's kind of a pattern. And that's one thing I keep trying to explain to people. And I've seen it now twice. This is the second time. And so I'll be basically a two bear cycle experienced user of Bitcoin and investor in Bitcoin and in cryptocurrency in general. So technically I should have profits guaranteed, but we follow the mining cycles a little bit more heavily on this channel, and that kind of pads things a little bit more than just purchasing Bitcoin, and that's kind of why we do it. We're all about revenue, driving revenue, driving revenue. When we hit a bear market, we accumulate hardware so that we can generate more revenue during a bull run, and that is the idea behind basically my strategy surrounding cryptocurrency and why I'm a cryptocurrency miner, and I don't just buy and hodl. Yes, though, it does take more work. But the reason why, once again, this is important is that we go through the same super cycle every 4 years, and that super cycle is based around the halving of Bitcoin. So every 4 years, thereabouts at a certain time, the reward that miners get for basically solving a block is cut in half, and this is part of the minting process. It will go on until approximately the year 2140 when the last Bitcoin will be mined, and at that point miners will only generate revenue based off of the fees being paid to the network for transactions. So that is the cycle we are seeing, and it's pretty easy to predict. So if you start to basically pay attention to the cycle, you can make money basically off of just investing theoretically if you have more time in the market. Once again, if you're on a second bear cycle right now, you're profit guaranteed. If you're on a 3 bear cycle, profit guaranteed. If you're in a 1 bear cycle, what are you going to do, right? There's a whole bunch of new people coming into cryptocurrency right now. And it's important that if you are one of those new people that are coming into cryptocurrency, first of all, if you're doing mining, congratulations, you just generated the revenue. All you got to do now is accumulate and wait for the next cycle, and you should be good to go. If you were just purchasing cryptocurrency, well, you're going to be at a loss, and you're going to probably get nervous, and you're going to either dump all your coins, at which point all the experienced users are going to buy all those up and hold them up, or you're going to just hold on to them and accumulate more and hope for it to go up in the future. The reason I usually preach revenue generation is typically at lower income levels, lower to mid income levels. It's very difficult. I'm in that group, by the way, as well. It's very difficult to just hold on to a currency because you have outside influences that may require you to sell that currency at a time, or that cryptocurrency at a time when it is not up. That could be unexpected medical expenses, something breaks on your vehicle, so on and so forth. That's why I usually lean towards revenue generation with crypto mining over just purchasing. But those are the two options that are going to happen with the newbies that are in the cycle, right? Either the experienced 1 bear cycle, you're down 39%, or the brand new newbies, you're down 67%. You dump all your crypto. The experienced cyclists, we'll call them, will go ahead and purchase all of that up. And then in 2025, when we hit the very predictable halving of Bitcoin, you'll see it go back up and maybe, just maybe, FOMO back in. And that's who you don't want to be at the end of the day. Now, is it possible crypto goes completely to zero and becomes worthless? Some people say so. I don't believe so. Obviously, once again, I'm no trade analyst and I would not listen to myself, so don't listen to me either. But there is the potential, of course, always of any investment going to zero, and you want to be cognizant of that, especially within anything that is altcoin related. So outside of Bitcoin, where you sit in a position where you have things like Luna and UST that pretty much went to zero, right? For example, and other altcoins that have trashed and collapsed, right? The important thing to note is a lot of the altcoins during a bear market will stop development, will disappear, and will start performing their exit scams at that time. So keep your cryptocurrency in a solid investment based on your own research that you've done, hopefully really, really well on whatever that project is, who the developers are. And one key note that I always like to look at is, were those developers through other bear markets? Are they experienced bear market developers, right? Are they developers that stuck around in 2018 and 2019 and kept working on their projects? Or are they just good time bull run developers that get in to make a little bit of money and get out? That's going to be the best thing to take a look at for basically leaving your cryptocurrency in any of these projects. So he did go on to provide the average entry price for each generation of Bitcoin investors over its 11 years in existence by following the UTXO age bands metric, which tracks the potential price level where long-term holders accumulated Bitcoin. So as you can see here, first generation $1.3, second generation $653, third generation $8,717, and fourth generation accumulation price $43,582. He says, I'm third gen, hang in there, fourth gen. The analyst also recently observed that institutional investors are now the dominant force in Bitcoin trading. Quote, retail investors are leaving the crypto market. Not bad for accumulating Bitcoin with institutions, but still worried about overall volume, which is significantly decreased compared to last year. Now, from my perspective, I lean more towards the fundamentals. I would say, as a retail investor, not an institutional investor, right? Don't invest with institutions. I would encourage you to learn how to utilize a paper wallet or cold storage wallet of some sort, at least a hardware wallet. Usually the guides are pretty good there. Just be very careful on where you order it from and make sure none of the safety and security seals have been breached before utilizing it, that sort of thing. But I highly encourage self-custody of cryptocurrency. I understand that from the trading analysis perspective, they aren't too concerned about it, but keep in mind, they are the old guard. That thinking is typically going to be traditional finance in the stock markets, etc. Crypto is new. It's different. It allows for the individual to control their investment, to control the currency that they have, whether it's a currency or whether it's a token or whatever it may be. You have the ability to do that yourself. So don't think that necessarily it's going to always follow the pattern of traditional markets and you always need some sort of institutional help when investing. Don't approach it from that perspective. Approach it from something new. Approach it like you were going to approach the internet, right? And basically, same rules apply here too with the bubbles and all of that, right? The odd thing about, of course, cryptocurrency is we're going to have a lot of little bubbles due to this cycle process that happens with Bitcoin. The CryptoQuant CEO next looks at leading smart contract platform Ethereum. He highlights that the ETH ecosystem remains strong despite a massive decline in price due to heavy interest in new blockchain niches like decentralized finance, non-fungible tokens, decentralized autonomous organizations, and play-to-earn blockchain games. Quote, ETH price dropped 56% from the top, but the number of active addresses just decreased by 7%. If we consider each address as a user, Ethereum has 551,705 daily active users today. These degens don't care about ETH price, but ape into DeFi, NFT, DAO, and GameFi projects. It is important to note, from my perspective, that we could start to see a decoupling based around these new technologies. So Web3, decentralized finance, NFT, DAOs, GameFi, and decoupling for the uninitiated would be a separation between the price of Ethereum or other similar projects that are utilizing these new technologies and Bitcoin itself, which would be more of your sound money stage. And if that happens, the market could look very, very different here over the next 4 years, meaning that having a Bitcoin, our traditional super cycle, specifically like we were referring to earlier, wouldn't necessarily affect the rest of the market as heavily as it has in the past 11 years. So I want to make that very clear as well. Ethereum is also down by 2.57%, changing hands for $1,965 US. Now, we do have a Bitcoin price history chart here that I did pull up because I wanted to show you guys here. This is pretty standard, right? So you have the increases in price, and then you have basically the bull run starting in around here and then pumping up. And then after that, it comes down, then Bitcoin halves again, and it shoots back up, and then it goes back down. Then the halving happens again, and this last one, it shoots back up, and now it's back down. We can basically expect it to, potentially come down to the prices of the previous all-time high and steady out there, or potentially it does go lower because of the new influences in traditional finance and institutional investing. I don't know. I'm not a trade analyst, once again, but these are important things to cover, especially from the mining perspective, because this will influence your buying times, right? What you're looking for hardware is a liquidation of hardware from cryptocurrency mining facilities and companies that are liquidating and getting out. From the GPU miner's perspective, what you're looking for is going to be the best GPUs you can purchase from home miners that can no longer afford to keep their rigs running. And yes, I know some of those are ones that watch this channel, and I'm sorry, that's just the way the cookie crumbles, right? And so when we see, of course, high prices in electricity costs going up in places like New York and California, plus the bans in New York and so on, what you will see is basically the home miners getting rid of all of their rigs because they're no longer profitable due to a combination of the price of electricity and of course the bear market, the price of cryptocurrencies they're mining going down, not to mention even the elephant in the room as well, which is Ethereum, the most profitable GPU mineable coin, of course, going defunct and going into proof of stake and no longer being mineable by the GPU miners. So all of that will compound into a liquidation of those assets. Now, if you are planning on trying to stay in the game for mining, even if you have accelerating electricity costs, you do have hosting options, and there are a ton of them. I'm going to be talking more about some hosting options here for these particular cases in another video, so make sure you hit the notification bell for that. Today, I just wanted to make sure that you guys are aware that the worst case scenarios that are being predicted is Bitcoin bottoming out at $14,000. Once again, from my perspective, I would be looking more like $21,000. I'm also curious if that will basically correlate to a drop in the price of ASIC units. But as we've seen, unfortunately, because these institutional investors are getting into mining Bitcoin, this cycle is going to be a little bit different for the ASIC mining in particular. And that's because what we've continued to see is an increase in difficulty on the Bitcoin network to basically mine it. It's becoming more difficult because more hash rates getting on there, more miners are going onto the network, and the price going down. That has not really ever happened before. This is a new thing within, of course, the super cycle, and it'll be interesting to see how that adjusts out. Large companies have much larger access to things like basically power regulations and power costs. They're able to reduce their costs. They can utilize basically large power facilities. There are even some power companies themselves that are invested into cryptocurrency mining, specifically with ASIC miners. And obviously they don't have to pay anybody for it because they are generating the power. So it's going to be much more difficult this time around to accumulate ASIC hardware during the bear cycle. So there you go. Be sure to hit the like, comment, subscribe, and I'll see you next Tuesday. If you enjoyed this content, be sure to hit the subscribe button for more, or check out this playlist for more crypto content related topics.